The RBA also saying the path to achieving a soft landing remains a narrow one. Your take on the decision to hike rates today?
Certainly a surprise, and a surprise for markets there. So, yeah, markets assuming that there'd be another pause coming through today. Economists mostly suggesting the same. So, look, the RBA pulling the trigger to raise by another 25 basis points. Clearly, they are very keen to get inflation to fall that little bit faster. If we go back to what they said when they paused initially, they said they'd be looking at what happens with the global economy, what happens with the labour market, how household spending is evolving, and obviously inflation. What made today's decision really tricky for the RBA was that the data across all four of those categories were pretty mixed. Clearly, the RBA is looking at that very tight labour market and the fact that inflation still has much, much further to fall in justifying the hike today.
Indeed. And so walk me through what future policy is going to look like. Of course, the last statement was relatively hawkish, which might suggest that there are additional hikes to come. What is the terminal rate for the RBA now in the aftermath of this surprise?
Yeah, so I mean, it's almost become their calling card by signing off those statements saying that future monetary policy tightening may be required to bring inflation back to that 2 to 3% target band. Look, I still think that this 3.85% will be our terminal rate, and it'll stay here for the course of this year. I think in their June meeting, we'll certainly see a pause come through. Time really is the RBA's best friend here. We've got a backlog of rate hikes that are going to hit Aussie households and businesses in coming months. We've also got those 880,000 borrowers who are moving from those fixed terms onto variable rates, those higher variable rates. That means that the RBA is going to get more bang for its buck for the rate hikes that have already been announced. So I think the combination of those two factors will see that 3.85% remain the terminal rate.
And implications for asset markets as well, including the ASX and the Aussie. We've already seen a spike in the currency off the back of this, but mid to long term, how do you expect rates at this level to impact assets?
Well, yeah, it's a really good point. We've seen that spike come through for the dollar. I think what we'll see is, given that I do expect this to be the terminal rate, that 3.85%, we're going to likely see the Fed hike at least one more time. That'll put a little bit of downward pressure in the sort of short to medium term. I think towards the back end of this year, the key driver of the Aussie dollar is going to be the fact that I still think Australia is going to outperform many other places around the world. Certainly, there are challenges facing the Aussie economy, but there's also a lot still going right. And I mentioned the strength of the labour market before. That's a key reason. So I think that strength should see the Aussie dollar appreciate just slightly towards the back end of this year.